Welcome back to my channel. So today's topic is top-down analysis. I want to show you a very simple way to do a top-down analysis that won't be so complicated, but just show you the rules and regulation. These are the steps we need to use to do a top-down analysis. Mitigation block, breaker block, order block, rejection block, fair value gap, liquidity void, old lows or old highs. What do we mean by external sorry, I meant to put range here. External range liquidity. That's our old lows and old highs, equal lows and equal highs. Internal liquidity, order block, fair value gap, and liquidity void. So we're going to do a top-down analysis for gold. So we're going to start it from 1 month. It's blocking my way. I'm going to start it from 1 month. Our top-down analysis. Sorry about that. Let's see if I'll be able to bring it down together. Sorry about that. Now, from 1 month, what can we see on the 1 month story? What is the market telling us? The market is telling us that there was a swing point here that signaled almost like an SND, almost like an order block, but it's a swing point. Can you see it? A long candle here. And if you use your Fibonacci from the high to the low, you realize that it hit 50% of that zone, this other block, like SND, other block on its own. That's the way I see it. So I'm going to put my line here because it's an upper zone, signaling that this upper place here is going to be taken out as a form of liquidity, our old high, which will be taken out as a form of liquidity, which market has already done here already. Then what is the next step? If you look inside here, we're going to follow these rules and regulation for our top-down analysis. You can see that there was a break of structure here. There was a break of structure here, which is what our external liquidity. This is the rule. If market takes out external liquidity, market always come back and take internal liquidity. So an external liquidity has been taken, so we'll be looking for internal liquidity. Our other block here, which you can see market reacted to, but it did not hold. Can you see that? Our fair value gap, which market reacted to, but it did not still hold. Liquidity void, there wasn't any form of liquidity void. Markets broke that swing high and continued in its momentum for a bullish scenario, which market has changed trend already. If you look inside here, if market wants to come back into this zone entirely, if market wants to come back into this zone entirely, market has to come back into this other block here. There's an other block here. That's the first one. There's an inducement here. You can see this inducement. Can you see it here? This is an inducement here, and this is what our fair value gap around here. This is on a 1 month chart. So we're expecting markets to retrace back in here and take out this low as a form of inducement. We're going now to our 1 week chart. What is our 1 week chart telling us as a form of story? Sorry about that. On our 1 week chart, if you look in very, very well on the 1 week chart, this is for 1 month, right? On the 1 week chart, you can see that there was a break of structure here. Market took out external liquidity and we're waiting for market to come back and take out internal liquidity. Don't forget internal liquidities are order block, fair value gap, liquidity void, and also you can look for other reference points around here. You can see that market, to continue the trend, there was a shift in market structure here. You can see that here, which market came back to take out as a form of breaker block to take out the external swing point. Don't forget, this is the highest point of 1 week. Can you see it? A break of structure on 1 week. Do I have 1 week here? A break of structure on 1 week, and this is the highest point on 1 week as our swing point here. Do you understand? Higher low, higher high, higher low, higher high. So we know that that place is going to be an old high. Now, markets, we're expecting markets to do what? We're expecting market to come back in here, and market will take this bottom here as an inducement. This bottom there as an inducement. Where's my dollar sign? As an inducement. So market has taken external liquidity. What is market going to look for now? Internal liquidity. What do we have as internal liquidity? We have what? We have our other block here. We have what? We have our fair value gap here. This is on a 1 day chart if you want to continue the trend of 1 day momentum. Now, if you go down to, sorry, for this 1 week chart, There's a break of structure here. Let me put label it. There's a break of structure in that zone there. There's a break of structure in that zone. So we're expecting market to come back to internal liquidity on a 1 week chart. Now we're going to 1 day. Market has not still changed character or changed structure on 1 day for us to know that market wants to come back into the internal range liquidity on 1 week zone. So the continuation for a bullish momentum on 1 day. On 1 day, let me delete this. On 1 day, on your 1 day chart, what do you see? You see a break of structure here. You see a break of structure here. This is for 1 day. Market has taken external liquidity. That is our old high above. So market is coming for internal liquidity. So you look for your institutional reference point, your mitigation block, which is around here. Mitigation block is around here also. You can see it. Mitigation block, which is around here. Because what happened? There was the internal break of structure here. Can you see? There was internal break of structure which was violated and went up. And also, if you look into that area, don't forget also that you also have to use your Fibonacci from the low to the high, which signal to us that yes, we're already in a discount area. So we'll be looking for an institutional reference point inside this discount area. Then what do we have again? We'll mark all the fair value gap that was seen in that discount area. There's a fair value gap here, a very small one. There's a fair value gap here. There's a fair value gap here. So these are the points that we're going to mark for markets to react in. And also, there's also like a liquidity here, like an inducement. There's an inducement here for market to come and induce us in. There's an inducement in that area. But don't forget that this is our target for take profit. Market has to come and take out the external liquidity for market to continue in the zone. I hope this doesn't get you confused. Just use this rule: old highs and old lows, other block and other block, fair value gap and liquidity void. If market takes out external liquidity, market always like to come back to look for internal liquidity to fill it up. Now if you open this 1 day chart very very well, where's my rules? If you open this 1 day chart very very well, you also see that what happened, market also broke a swing point here. Do you see? Market also broke a swing point here as a change of character, signaling what? Signaling this area here as an inducement. That's the first one, inducement. The second one we have here is a what? Is a fair value gap. And the third one we have here what? Is what? An order block. I'm just following the sequence of what I have here. There's a breaker block here, but what do we have? Inducement. There's what? Breaker, there's mitigation, there's no mitigation block, but there's order block, but there's no rejection block, but there's fair value gap, there's no liquidity void, but there's old high, which is here, which is there. So you can go down to 4 hours. If you don't want to trade 4 hours, you can go down to 1 hour. And when market gets to that zone, you use the same institutional reference point. External liquidity has been taken out. You just put your line at internal range liquidity. But don't forget also 1 day range. The 1 day range is still there. External liquidity has been taken out. Do you see? You can go as low as lower time frame and look for entry. Market violated that zone. Market has not fully changed character. Just watching. This is just this whole institutional reference point. Let me go back to 1 day and delete 1 week, so I don't get you people confused. Okay. Now, if you go back to where's my chart? I like that as my guide. Now, you are not wrong, even though market induced you in. You are not wrong. We're just watching the market do its own thing. Okay. We're looking for market to change structure. All we'll be looking for is just buy. Don't forget also there's a break of structure because market has taken out external liquidity zone here. So we'll be careful around this area. We'll be careful around this other block area. We'll be very, very careful because market has not really given us full signal that it wants to continue the momentum of what 1 week. We'll be careful around there, but you can take your entry from there market shifted structure here, mitigation block. Take your entry from there. You can go down to 5 minutes or 15 minutes, and you can target this area. You can target this area, so you will know when to run away from the market. You just target areas that have fair value gap. If you use your premium and your discount to weigh it in, you'll be very, very, very careful of those areas that have fair value gap. Can you see that? All those areas that have fair value gap in the premium area. Example, another one is also here too. Can you see another one here? Another what? Another fair value gap, and what other block is there, which made market to react there. Because why? Market took out external liquidity and is targeting internal liquidity. But on one day, we are still on the 1 day zone. We're just trying to find entry. If I try to play this from 1 day, can you see? Right place on, can you see that market still came back what and took out this liquidity, this area of liquidity? But now what are we doing? We're struggling with what? Finding a good entry. So all these points are institutional reference points. You can decide to wait, take your entry from this area, trade it up, trade it up. Okay, let's see. Can you see that? We can trade it up. Market took out the external liquidity from here, but what came back in again to trade in the what? Trade in what? Other block from 1 day. I don't want to make this chart so crowded so you don't get confused. Trade came down in here, and if you notice very well, it came down what? Into this. Look at this liquidity void here. But if you go back to 1 day chart, let me go back to 1 day chart. You will see that that is a full other block that markets came onto and reacted there. So now you can give yourself targets, come down in here. This is also what the zone we marked from. Let me delete this for you so you don't get confused. This from 1 day, can you see? This from 1 day. Why? Because there was a swing point that was broken here, and this zone here mitigated the fair value gap inside external liquidity, internal liquidity inside here, and went and created a swing point here. Markets came in here, tap on the other block here. You can go to 1 hour. On that 1 hour chart, you're waiting for a shift in market structure. And what happened here? Market shifted structure here on 1 hour. What can you do? You just enter your next fair value gap here. Put your stop loss below here. Come back to 1 day. Come back to 1 day. You can put in your TP1 around here. Put in your TP2 around here. Put in your TP3 around here. And the last one will be around here. And this is how you do top down analysis. You can go to 4 hours, you can go to 1 hour, you can go to 15 minutes, you can go to 5 minutes, just to keep on refining and refining and refining those zones. But what you'll be looking for is more of a buy, and that will give you 1 to 1 ratio 20. But it could take you time to get that zone, almost how many months to get that zone, but it's a good trade. So I hope this video is amazing and beneficial to you. Follow this step: mitigation block, breaker block, order block, rejection block, fair value gap, liquidity void, old lows and old highs, and to help you. And also know the rules that if market takes out external liquidity, market always comes back to take out internal liquidity to push itself to continue the momentum. Don't forget to subscribe on my channel. Ask your questions and I'll answer them on the comment section. You can email me and I'll reply all your messages. Thank you very much.